What the heck is going on with Apple? Timmy, what are you cooking up over there? Because people aren't liking it. They're eating it and they're puking. I mean, look at Apple. It's just collapsing. So far, it's down about over 35%. By the way, pro tip on TradingView, if you hold down Shift and click a button, you can easily do percentages. I don't just do them in my head, even though I'm Indian. I'm supposed to be good at math, but no, this tool is helpful. But really, Tim, I mean, what is going on? Do we need to call Jobs back? Do we need to get an Ouija board or a shaman and talk to his spirit? WWJD. What would Jobs do? Or maybe it's not your fault, Tim. Maybe people just have started to hate iPhones, which would be surprising because people are still making fun of me for using an Android. But fortunately, someone is taking a stand. Jax Films. On Twitter, every day he's been posting Twitter for Android, along with a screenshot of every day he's done it. And he's not gonna stop. Is this a political move? Maybe. Is it for the rights of all Android users? Yes. Definitely. And I know, just like Gloria Borger, my idol, the way she taught me was to not to get political on my channel. But in this case, I'll tell you my political opinion. I support Jack. Well, today in this video, we're gonna talk about why Apple's stock price keeps falling. And I'm finally gonna answer the question that everyone keeps constantly texting me and asking me, AK, should we buy Apple? Is now the time? It's a great value, it's falling. Oh, we should scoop up some shares. Well, today is the day I'm gonna tell you what I think. But before we do that, if you haven't already, make sure to get our FOMO trading guide. It is absolutely wonderful if you are feeling FOMO in the market, because we had a pretty strong rebound just recently, didn't we? It was so strong and so fast, it's likely that a lot of people missed it. But don't feel bad, because feeling bad about missing out on something is not conducive to good trading. So check out this guide. But anyway, now on to why Apple is falling. So the extremely smart and ridiculously good looking Alex Barrow of Macro Ops, who is my friend and business partner. But you know, they always say put friends before business. So we're friends first. Anyway, he released a report recently talking about what's going on in Apple. Now, this report I'm about to show you is exclusive to MacroOps members, so you're not supposed to see it. It's behind a paywall, but I've got exclusive access because I know the URL. So here we go. Now, this was written a little while ago, but the big news was that Apple cut its first quarter revenue guidance. Why? Because they got weaker iPhone sales than they expected. And there's a big gap down on that news, and now Apple, as I showed you before, it is down over 35% from its highs. So no small fall here. Now, Tim Cook blamed all of this on the slowing Chinese economy. He said that they did not foresee the magnitude of the economic deceleration, especially in Greater China. In fact, most of our revenue shortfall to our guidance and over 100% of our year-over-year worldwide revenue decline occurred in Greater China across iPhone, Mac, and iPad. And a majority of that revenue shortfall came from the iPhone. Here's a chart that shows how revenue has been contracting every single year in China. Went from 16.8 billion to 12.5 to 10.7. Keeps falling. And Ben Thompson, who's a very, very smart tech analyst over at stratechery.com, which if you're not subscribed to, here it is. You should definitely subscribe. This guy is really smart. Really great stuff. He was saying that the slowdown in the Chinese wanting iPhones had less to do with their economy and more to do with Apple's lack of moat in the country. And remember, when we're talking about iPhones, this is really important for Apple because they make up 63% of the company's revenue. So here's what Ben had to say. In most of the world, Apple is differentiated first and foremost by its integration between hardware and software. So the company has a monopoly over iOS, which is one of the most popular operating systems there is. And because they have full control over it, they are able to sell their hardware at much higher prices. But in China, iOS doesn't matter as much because the Chinese have their own services that are really important, like WeChat. And WeChat is basically like a texting app like WhatsApp or Facebook Messenger. But something like WeChat is completely independent from iOS or Android. And actually the carriers in China change Android to fit the Chinese market, which you can't do with iOS. So iOS is probably a little worse than having Android over there. So yeah, people aren't making fun of other people for having Androids. That's just a beautiful American culture thing, making fun of poor people, even when they're not poor. But even if they were poor, it'd still be okay. Not to make fun of them, but for them to have an Android because Androids matter. But the net result is that unlike in other markets, in China, Apple is purely competing on how attractive their hardware is because no one cares about iOS like they do over here. So Apple in China is just another OEM, and an OEM is an original equipment manufacturer. So they're just another producer of phones. They're nothing special. I mean, there's still Apple, but not to the extent as in the other global markets. So Alex explains here that in much of the world, Apple enjoys a high retention rate of 80% among its iPhone users. And so basically, if someone's getting an iPhone, they're sticking with an iPhone forever. They're never converting over to Android. They're not going back and forth. Once you're an iPhone user, you're an iPhone user. But in China, the retention rate is only 50% because again, it's just a piece of hardware. The software isn't as important. So the main thing that a Chinese consumer wants then is a sexy iPhone, something that makes them look cool cool, as a status symbol, like a Gucci bag. But since, you know, most of the new iPhones coming out pretty much look the same, can't really tell them apart, the Chinese haven't been upgrading as much, which is why the sales have been kind of disappointing. But Ben says the good thing about all of this is that Apple's competitive position has not changed today versus 6 months ago. So it'd be nice if the competitive position got better, but at least it didn't get worse. Now the next iPhone hardware revision should sell better in China just because it's new. And the other good part is that Apple is still Apple, and it is still a status symbol. So people are gonna pay whatever prices Apple puts out there. And thanks to how important cell phones are to everyone nowadays, and the fact of how much they get beat up, I mean, people are breaking their iPhone screens every day. These phones are gonna have a faster replacement cycle than PCs. Because if you're selling hardware, yeah, you want it to last to make it be a good product, but at the same time, you want people upgrading all the time because that's new sales coming in. So by its very nature, a phone will have a shorter replacement cycle than the old school PC. And in the meantime, as I explained before in my previous video on Apple, their services businesses continues to grow. And in that last video, I explained that how with the smartphone market becoming mature, there's naturally going to be less sales every year. So Apple as a company has to shift from a product manufacturer, from solely being a product manufacturer, into providing services, so that all the people in the Apple environment keep coming back and paying recurring revenue for those services. That way you don't have to depend on them upgrading their iPhone if they don't want to. So Ben said they're pretty much abandoning also ran hardware products like the HomePod or Apple TV, and instead they're focusing on the services. So he expects a lot of announcements in the services area in 2019. Now, as Alex pointed out, if you look at this long-term chart of Apple, and this right here is a weekly chart, you can see that the stock is going through its 430% drawdown over the last 12 years. And right now it's trading right near its 200-week moving average, which is the blue line. I can show you that a little better over here. And Alex was explaining how this would be a significant support for the stock. And as we can see, it pretty much touched that blue line right here, and yeah, it's trading sideways now. So the support is holding so far. And from a valuation perspective, the stock is trading pretty cheap. So it's selling for a trailing 12 months PE ratio of 11.9. Now that's near the low end of the range of its multiples that it usually trades at. And it's way below the market's PE of 19.5. And if you look at the last few times that this stock was trading at this PE ratio, they did not have nearly as much cash on the balance sheet as they do now. They have $66.3 billion on their balance sheet. That's 80% higher than the last time Apple was trading at this multiple. And then excluding all that cash, the company's earnings trade for a multiple of just 10x. And this is Apple. This is still one of the strongest companies in the market. So Alex thinks that the stock should trade around its 200-week moving average for a while. And a while means like up to a few months. So over at macro ops, even though we know it's a great value, we're waiting because we need the technicals to match up with the fundamentals that we're seeing. And that's my answer to everyone who's asking me, should they buy shares? Well, my answer first of all is follow your own strategy, because following your own strategy is what's going to pay off in the long term. But when I'm looking at something like this, I'm not trying to buy something just because it's cheap, because just because something is cheap doesn't mean it could get cheaper. Apple could keep going lower from here, and it doesn't matter how crazy that is because it's at such a great valuation. It can keep going lower, or like Alex was saying, it'll keep going sideways. So if I put my money in right now, that's just dead money. That's money sitting in Apple that's not doing work somewhere else. That money's not in another stock that might be moving right now. So what we do at macro ops is that we find value plays. We do a lot of research, we talk to a lot of value managers, and we find the best plays, but we don't get in right away because we need to wait for the technicals to line up. We want to get in that great value right before the market is discovering it. Because let's be honest here, if you're the only one who knows about the value in a stock, that's not good, because then there's no other buyers to come in and push up the price. You want to get in at the right time, right before the rest of the market realizes. And the only way you would know that timing is just following the technicals. So in Apple's case right here, this is a weekly chart, there's no base forming yet. You need to first see a base and then movement from that base before you get in. But you know, that's just our strategy. Again, you should follow yours. I mean, there's a lot of successful value people that just get in and sit. And their biggest edge is their patience, because it can drive you crazy just sitting in a stock for a few years and it's not doing anything. That's why for my personality, I can't do it. I like the movers. So do what works for you. And again, if you're feeling FOMO, make sure you sign up for this free guide. It's going to help you out with that and any other negative emotions that you should not be having while trading. And of course, if you haven't already, make sure you subscribe to this channel and hit that bell so you get an email notification for when the next video comes out. We might be doing daily videos now. Maybe. We'll see. Either way, hit that button so you know. So subscribe, stay fallible out there, and I'll see you in the next video. Bye.